Good evening. Ira Epstein, and here we are on Tuesday, the 11th of July, 2023, 5:50 p.m. Central Time. Let me start off by thanking all that wrote in and wished me the best with one of my family members. We did spend the day at the surgical centers yesterday, the hospital. I call it surgical center. It was a hospital. And unfortunately, the operation couldn't go the way that they wanted. There's a whole team in there, and the question was, would they find a certain thing that they can then go forward, and they didn't find it. So they got to go to a different phase. So I'll be going through this again probably in a month, 2 months, 3, whenever they come up with what they can do. But there are things they can do, we hope. All right, sorry about that. Now, tomorrow you have the CPI report, PPI on Thursday. We get unemployment claims again. There's an awful lot of information about to flow. And remember, everybody's now geared on what is CPI going to do. The estimates are not for a very big change on the CPI. They were 5.3 last time. I've seen 5.1 and 5.2 estimates so far. I don't care what the headline does. It's not what the Fed's going to focus on. The Fed's going to focus on the core number. That is now come into focus, that's where we have to be looking. That's what we're going to see. We've already seen the unemployment number. And while it's slipping, it's not enough of a slip to get the Fed off focus for a 25 basis point hike, July 26th. So keep that in the back of your mind, and we'll see what goes on. The other big event that's happening, they're about to do the rebalancing, it's called, of the NASDAQ. Now, you know that what's going on in that NASDAQ is 7 stocks, 8 stocks have made up the mass of the run-up. Well, after it's done that for a certain period of time in the charter of this index, they rebalance it. They'll give it different weightings. They don't want the market to be just run by those type of overweightings. So that is going to happen. Now, does it affect prices and so on? The experts say no. I back away. I'd like to see what it actually does. There's another event happening. As the bears are still hanging in there, all you got to do is turn on Bloomberg and CNBC and you get all the guys still coming up, especially Bank of America. They're holding to their bearish view. They haven't been right at all on this. But the bears keep saying, well, the situation is going to get even worse and blah, blah. The meme boys, remember those guys who would buy anything and drive the stock up, something that they thought was severely undervalued? This is there, if you will. We've laid the fertilizer for them to come in and nurture a crop and get those things going. I'd be surprised if you don't see more happening very shortly. When we take a look at the S&P 500 index and we look to see how this whole thing is going, you can see how the market is just sitting up here and it's still near the whole highs of the move. You can see on the pattern here, we've gone into a sort of pause. You'd expect that. You're not back at the highs you made back here a week ago. You're just sort of sitting, and that's what you should do until you get through tomorrow's number. Will people jump ahead and try to figure out what to do? Of course they will. That's the nature of the market. The pattern in the S&P is one of a lower low and a higher high. So you've got this sort of thing going right now. The market is fighting a battle, current tense, not past tense, current tense, at 4,442. You see that red line. That's the battleground. The resistance, if it can make a move, will cross the 4,500 level to the 4,509 if it's going to make a run to the upside. And that's where I'd expect the next round of resistance to show. We're getting a more sideways pattern out of this than we had back here. We had the sideways pattern here, and when the market finally launched in June, it took off with the help, remember the word, artificial intelligence? That took everything up. The pattern's a bit different here in that we have more of a sideways pattern right now. Are we overbought? Oh, yeah. So unlike in June when you develop the embedded reading, you have nothing developing on the horizon here. You have an overbought market that might get a pop off of a friendly CPI. I doubt that it'll fall very hard. And you'll say, why? Because every big break we seem to get in the market, it's just like the current one, the correction, if you will, that we had here, gets bought by the naysayers. They'll say, they go the opposite way. Yeah, the Fed may have one more to go, but they'll be done at that point. There's no reason to keep going. And folks, they have been right, not wrong. Let's give them credit, okay? Credit where credit is due. I didn't think the market, I was a naysayer, okay, at one point, and a non in that camp. Certainly, I looked at these markets breaking, but they took control of this market in March, and I wasn't on their camp. And I'm talking fundamentally. Chart-wise, I trade the chart. I don't give a darn what I think. I've learned to separate the two. And right now, you're neutral, overall friendly. That's the way to look at it. In the NASDAQ, look at how you're suddenly going sideways again here. And you're hanging in a territory that if you're up at all tomorrow, you'll be overbought again. So the market, this was that pop that you had off artificial intelligence, the correction, and now you're just drifting in the sideways action, a dangerous area. The Dow's similar. Okay, I mean, you can see what you've done. Here's that correction off the AI. Here's the AI run-up. They all did the same thing, and you're in a broader sideways action. Now, two of the markets have strong seasonals at this time of the year. They are the NASDAQ and they are the Dow. So pay attention to that. They normally go up into the latter part of the month. We'll see if that's going to be the case this year. The Russell's not part of that. Yet the Russell's outperforming. It's going up for new highs. It has finally caught its, if you will, mojo and come up here with an uptrend. It's in a lot of resistance and it is very overbought. So fair warning, I think that a lot of the smart people that are in this will probably take some money off the table and go see the report with at least some protection of what they've earned. In the T-bond market, we fell hard and we're getting a bounce. Now, you are oversold. You're not embedding. A lot of resistance on the way up at 126.14. You'd have to clear this high all the way here to say that on this current pattern, that the downtrend is over at this point. In the 5-year note, if you'll notice, you lost the embedded reading. The market has come up. I wouldn't be surprised if you make a run to the 18-day average of closes. In the dollar index, what you've really done is you've gone from the upper Bollinger Band, the black dashed line, to the lower. So as the market was coming up, and if you took my course and you understand the first challenge of a Bollinger Band, you're not embedded. I think the pros came out. And guess what? I don't see a downtrend, but I'd bet those short in different methods start covering shorts against the lower band. In the euro, I am friendly. So, by the way, being friendly doesn't mean the chart action's there. I am friendly as a fundamentalist on the euro over the dollar. I've made mention that to you. But you're overbought. You're at the upper band. As a chartist, no. I'll let you carry the positions and the risk going into this report. It's a gamble, all right? It's too big of a gamble. Even if the report's friendly, when you come up to a Bollinger Band, you normally fail. In the British pound, they've got to keep raising interest rates. If you looked at the wage inflation, it's off the charts. It just keeps getting worse and worse for them, so they're going to have to keep tampering it down. You're running right now the upper band, pushing it out. You're not embedded. You can get a correction at any point, but there's nothing here that says, hey, come out of the market in terms of it's going to drop. In terms of hitting the Bollinger Band for the first time, you did that today. That's where I think the pros came out. You're not embedded. In Bitcoin, lower highs, lower lows, momentum turned down. I still have an open target of the lower of the 18-day average before you get over the recent highs that this market made. So I'm looking for the market to still slip a little bit. In Brent versus WTI, look at how the market is suddenly narrowing in. That narrowing in, at first it was the WTI leading price, but if you're narrowing in, they're just going to keep coming. And notice how the Brent is up at the resistance, but look at the WTI. So the WTI is the one running to narrow in that difference. And you always look to see what that is. Look at how this market has made a move. It's back up to challenging the 200-day average. Is it anything to do with the president saying they're going to buy 12 million barrels of oil before the end of the year? Probably has a lot to do with that. I think so, at least. And we'll see what goes on, but you can see where you're at on it. We're certainly going to hit more production in the United States, but there's more demand coming right now. In gasoline, well, you've cleared everything. So you came back down. You did not make the move for the 4th of July. Now you're getting your other demand as we're going up in the regular gasoline. It's carrying this market. So while your gas buddy in your area is telling you the cheapest gas, it's going to be climbing. It'll be a function of this rally that we're getting right now. Are we overbought? Absolutely. Are we in a resistance points? Yes. That's not reason to be a bear. It's reason maybe to take money off the table if you've been playing the long side. And with all the heat, wouldn't you have thought natural gas would have caught on fire? I mean, I can't turn on, be it NBC in America, ABC, CBS on the nightly news, and not hear about the weather, the heat, what's going on. 120 degrees, it's going to be in Phoenix this week. The first 11 days of the year hasn't been, I think, under 110 or something. It's crazy what they're going through. Texas, the power grid's being pushed. You can't move this. When you get bullish news and markets don't move, you got to be careful. And what's been holding the market back, temporarily at least, is the 100-day average. If and when the market pops over that, it's very, very possible that if you can clear 275, for example, you might be ready to get up to that upper band here at the 287 level. So those are things at least I'm looking at. You put them together, you come up with a game plan, and we're writing about all this all the time. Where? In our Linn Research is where we do this. Now, let me tell you how you get this. You can get it by email from us. That's one way. You can get it in our charting software is the other. I read the reports in the charting software. I just find it's easier to do that. But then I look at the emails because I want the big program sent to me if I'm going to send them to my clients, and I want them to see PDFs of certain things, and I copy it there. We cover all this. While you're trying to get this, you might want to take a free trial to my research. I write 2 reports a day, and then I back them up with videos. And if you haven't tried this, I'd like to give it to you, and it's free. No credit cards. We're not asking for any of that. How do you get all this? You go to our website, iraepstein.com. Under free offers, it's on the top left. You can't miss it. There's an icon also up here. You give that a click, and you can do it the old-fashioned way. How? You call. We'll take care of you. I'm Ira Epstein. You have yourselves a good day. Remember, 7:30 in the morning, CPI. I'll be all over it. Take care.